Hey, welcome back, everyone. I want to talk about these weekly pay single stock funds from ROUNDHILL. They use leverage, and they're paying incredible per share weekly payouts. For example, this is Amazon, AMZW. It paid 33 cents per share last week. It does not write covered calls. It does not sell puts. It does not do daily out of the money covered calls. Zero DTE. Not at all. It uses leverage, derivatives, swaps, and apparently they are looking to make 120% of a daily trade of a stock. In this case, it's Amazon. And I'll give an example. If Amazon moves up 10%, this will move up 12%. But here's the deal. If it falls 10%, this falls 12%. They're not writing covered calls. And I'll tell you, this is not a dividend income play. This is literally trading the range. I think what you need to understand about these, if you're not going to write covered calls and sell cash secure puts as one of your primary income strategies, this might be something where you can literally play the come and play the range. Let's talk about this for a minute. So this is Amazon right here. And if you bought AMZW, as Amazon falls, this thing's going to fall more. It's a leveraged ETF. And what they're doing is they're generating that cash flow as a return of capital. So they're not writing covered calls or selling puts and generate some sort of premium as a profit and then distributing it. They are literally playing swaps and derivatives at a clip that is leveraged. So what that means is when the market goes higher, you can make some good money. When the market goes down, you get kicked in the nads. Look at this. This thing was trading at 53. And of course, Amazon has fallen. Well, this thing has fallen considerably to 46. Then it rallies, falls again. Right now, the way I see this trade, everybody sees it as dividend income. You get this per share dividend income every single week. And it feels like dividend income. It feels like you're investing in something like XDTE, IWMY. But you're not. See, they write covered calls. Now, they may write covered calls on the shares or maybe a simulated holding, or they'll just create a position with calls and puts. And then they write covered calls against that. So they're actually writing covered calls. This is why something like Misty is collared, because as MicroStrategy's rockets from 278 all the way up to 350, this thing literally treaded water. It's because it's collared. They're creating a position in MicroStrategy. And what they're doing is they're writing covered calls, weekly covered calls, and ultimately, as MicroStrategy goes higher, well, of course, this can't move with it because they've written a call against it, meaning they've given up their upside. This is why when you're looking for dividend-paying funds, you want a bull credit spread. They actually write covered calls, which caps their upside, but then they buy call options alongside that, so when the stock does go higher, you actually get some of that upside. I'll tell you what, this has now become the alphabet soup of dividend investing. And I'll tell you, what's clear to me is you have all these competitors vying for your money. YieldMax, ROUNDHILL, Defiance, they all want your money. They want you to invest into their funds. But basically, you're paying for time. You're actually out there busting your ass at the 9 to 5, and you have this little bit of money, and then you buy their funds. You are buying time. What you want is paid. And based on a strategy, you get paid. YieldMax is one of the more popular ones. But I'll tell you what, ROUNDHILL has gotten really good. I own a lot of ROUNDHILL. But I'll tell you what, I'm now going for a couple of these. Just a couple of these. Don't get too crazy. And what we're going to do is we're going to go ahead and buy these, but we're going to play the move. Now, here is the most important part of this video. If you watch all of these videos, they're talking about it being dividend income, return of capital, this, that, and the other. Swaps, derivatives. You don't understand any of that. There's a company out there that have professionals doing this for you. So what you want is that weekly dividend income, and you really don't want to think twice. But here's the deal. You can really jack up your returns if you use one of these ETFs. Now, these are single stock, so there's single stock risk. So, right off the bat, when this fund right here, METW, this is the Roundhill, Facebook, or Meta trade. Now, they're going to pay you a weekly dividend, and it feels good, right? You get that weekly 40 cents per share cash distribution in your account. And the week before that, it was 64 cents. This is incredible because a lot of the funds that we buy pay 64 cents in a month. Well, these things are paying it in a week. Why? Because they're using leverage. And what that means is if Facebook goes higher, this thing's going to move higher, 120% of a daily move. So the only way to play these things is to play them when they're down. So what I want you to start doing, just like me, I bought two of them. I bought Amazon and Meta, or Facebook. Why? Because look at where these things are trading. Let's take a look at my favorite right now is Facebook. Look at this. Facebook has triple tapped. I've been sending this to the members. We have been doing puts on Meta's 2x leveraged ETF, generating incredible cash-on-cash percentage gains. I mean, we're talking in a week, we can generate 1.8%. This is incredible, and we're doing it. Look where it's trading in the range. What you want to do is get involved when it's trading down here because you have a more favorable chance to go higher. And if you're going to invest in METW, which I actually have, then you want that move to the upside, right? Because this is going to move 120% to the upside. What I'm trying to tell you is you need to look at these differently. Now, look, if you just want to sit around and just collect the dividend, hey, that's fine. You'd have been in this bad boy at 54. It's fallen to 42. There's no NAV erosion here because they are literally trading with leverage. It is falling 120% of a daily move of Meta. There ain't no NAV erosion here. And what they do is they then pay you out. Now, it's return of capital. Do understand that. But here's the deal. If you buy these things, buy them at the bottom of the range. We're going to talk a lot about this going forward because I'll tell you what, if you've been a part of my channel, you know I find those great funds and stocks at the bottom of the range. Look, if you've been with me any length of time, you remember when I did this video and we did the puts against it, made hella jack. We were using the 2x leverage ETF to Apple. And what we were doing is we were putting on puts when it was trading in and around 194. This thing was triple tapping, and we put on all those trades, made all that money. Look what happens. Sure enough, because Apple's one of the Mag 7, it's going to go higher. It did. Now look, right now you're not touching Apple. At least you shouldn't be. And you're definitely not buying Apple's Roundhill version of the dividend payer. Even though it pays hella dividend, this thing is going to fall. And what's going to happen is it's going to be just like Meta, which is Facebook, and Amazon, where these things, just like the stock, was trading at 53, this thing bottomed out at 43. And again, you're thinking it's NAV erosion. It's not. Let's take a look at Amazon because I have done puts all over the place, just knocking it down. We take that premium, by the way, that's the golden goose of investing. Writing covered calls, selling puts, that generates a cash profit. That's a premium. We can do anything with it. You're out there busting your ass at the 9 to 5. You're paying for vacations. You're paying for dinners. You're paying for food. You're paying for groceries. Look, man, you don't have that much. You learn how to write covered calls, sell puts. You're able to then take that free money and then buy one of these bad boys. Let's take a look at Amazon. And by the way, in the description, 1 free month offer. You're getting all this. I'm going to show you all my trades. Stick around. Don't move. I'm going to show you all my trades. Look at Amazon. I told the members, and I could show you the trades. I'm going to show you the trades. Look at this. This is the recent move. Amazon goes higher. They have earnings, and this thing falls from 236 all the way down to 211. Now look, this isn't some high IV stock like MicroStrategies or Robinhood. That's a hella fall right there. and then it rallies, and then it pulls back. So what we want to do is identify its trading range, and that's what we do with the membership. I have videos that I show the members. All we do is talk about chart reading classroom. It's all about good entry points and chart reading. By the way, this is the phone app. It's also a desktop app. Check this out. You see all my trades, and these are all my look at this. I closed AMZU today for $750, $450. Oh, look at BidX, $1,100, knocking it down. That's what we do. We put on trades. Members see all the trades. They see them right here. So when I put them on, they know they can follow that trade. But look, back at the videos, look what I did. I do all these videos for the members. You get this. This is exclusive. You don't see it on YouTube. I want you to get the membership. In the description, get your 1 free month offer. Now, the deal is this. We are going to use these for momentum plays. Yes, you are going to buy them, and then as they go higher, you're going to sell them. You don't want to get caught in this rip curl right here. You go from here to here. Now, granted, you're collecting those fat dividends, but I'll tell you what, if Amazon doesn't find its way higher, you're in trouble. Remember, the Roundhill Weeklies, they are 120% of a move in the underlying. That means leverage, and that means something you don't understand. So let me bring it to its most basic. Right here's the moment you need to be listening if you're interested in any of those weekly single stocks from Roundhill. They're using leverage, and they're paying out not necessarily a premium profit. So, with that said, one that you might want to invest in, and I have, it's called WPAY. Now, I love WPAY, and the reason I love WPAY is because it is a basket of all these single stock leveraged dividend payers from Roundhill. All the ones I just talked about, Meta, Facebook, Apple. What they do, they put it into a basket, and this bad boy pays 73 cents last week, 88 cents the week before, 51 cents, and 54 cents. And by the way, every single share that I have of this WPAY, which I have 427 shares, I bought with premium from covered call writing and cash secure put selling. I didn't put a nickel out. We write covered call, sell puts against things like AMZU, MSFU, TNA, SOXL, LABU, DPST, knocking it down. And what we do, take a look at this. These are all my trades right here. Zoom in here if you can. Look at this. This is October right here. Oh, if you see a red X, that means I lost money. Tell me where you see one. Oh, look at this. $1,500, $700, $1,000, $200, $8,700 on a poor man's covered call. Love that. Look, what you want to do is learn covered calls, sell cash secure puts, then buy all these dividend paying funds with free money. Free money. Because you earned it. You paid the tax man 25%, and then he took the profits and bought these. All right, let's end it right now. Going forward, you want to buy any of these Roundhills when they're trading at the bottom of their range. Something like Robinhood, they have a Robinhood version of this. Why would you get involved here when it's absolutely going to pull back to here? And if you don't get that, then you really need my membership because you don't know how to read charts. You're literally just grabbing and hoping it's going to go higher. That's the number one thing I teach at the membership, how to find great entry points and how to not get burnt when these things come back. I've proven it time and time and time again. I'll tell you what, man, I don't know when the last time I had a losing trade. Now, I know everybody's making money in the stock market, but not like us. So what I want you to do is this. I want you to learn about these Roundhill Weeklies, understand that it's a momentum trade, and man, try to buy them at the bottom of the range. Did a video, in fact, I just did a video today. We talked about 3 trades. Meta, which is Facebook, Amazon, and Microsoft. But in that video, I talk about the trade I did with TNA, LABU, and DPST. I'll tell you what, you want to follow the leader. Hey, all I can tell you is this. I'm trading my own money in retirement. I can't lose. There's a lot of people on YouTube just throwing numbers everywhere, but what I notice is their numbers aren't growing. All they're doing is creating content to make the YouTube money. Not here. Because if I don't make money, I got to go back to the 9 to 5. And that ain't happening. In the description below, get your 1 free month offer because I'm going to tell you what, this is what we're going to do. This is what we're going to do. We're going to highlight when these things are at the bottom of the ranges, and I'm going to tell you when to load up on them. So look, to all the members that are watching, get ready. That's actually going to be a special post all the time. And I'm actually going to put up a special post in the blog to follow it. Hey, I've already got skin in the game. I got Amazon and I've got Facebook because they're trading at the bottom of the range. I want you to be a part of that. In the description below, get your 1 free month offer. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.